In this lecture, we set the scene for meaningful financial statement analysis by acknowledging the stakeholders, those who use financial reports and rely on the information within them. Before we go any further, let's reflect on who it is who are the users of financial reports, and that will give us a sense of the sorts of information that they're going to be looking for. We can broadly define the users of financial information by looking at four groups. The first, the group of people or organisations who provide resources, and those can be financial resources that come from lenders or shareholders, or other services that come from employees or providers of goods who will be creditors. At the other end of the value chain, we look at the people who receive or purchase the goods and services that the organisation provides. Those will be customers, and depending on when they pay for it, they may be debtors or accounts receivable for the business. There's a number of regulatory parties who have a great deal of interest in the organisation, and they'll be looking for a different set of information. And so we've listed just a snapshot of a few of them there, the tax office being one of the more obvious ones. If you're a company, then the corporate regulator and ASIC will be interested, and there are many, many others. One key group of people who are interested in the financial statements, of course, are managers. Internal management need to use financial information as part of their decision-making framework. When we analyse financial statements, what we're looking for is the answer to certain questions. And so the questions that we're asking of the data will guide us as to how we'll do that analysis and what sort of information is relevant and what we will choose for this particular purpose, perhaps not to focus on so much. So the question, why are we doing the analysis, is key to us to determine what the structure and the shape of that analysis will be. In other words, what are the questions that we're asking of the data which is in front of us? Now, one thing we should be very clear about here is we can analyse and analyse and analyse, and there are many tools for analysis, but we can determine some things that we think are good and some things that we think are bad, but while we do that, we don't get answers or solutions. All we see is what is the fact, and that may be a conclusion that we perhaps draw as to whether we're comfortable with it, not comfortable with it, whether we'll invest, whether we'll become an employee of that business, whether we'll become a customer. All of those are the sorts of questions that we might answer. Having done an analysis, ask the question of the data. Keep in mind that analysis has no intrinsic meaning in itself. We give it meaning when we put it into context and interpret it. And so until we put it into context and interpret it, what we have is a bunch of figures. They may be very fine figures, hopefully well prepared and well analysed and well presented. But we are the ones who have to give it the life, the context, the meaning, in order for us to be able to derive answers. So what we're drawing on as the base data for our analysis are all of these and more. These are the ones that come to us within the annual report, the financial statements, the three main statements: income statement, balance sheet, statement of cash flows. Of crucial importance to us is to have a look at the independent auditor's report of a company. The auditor's report will tell us whether the data that's in those financial statements complies with all of the mandatory requirements. And it will also help us to know that the auditors have formed an opinion as to whether this business is solvent, that's to say a going concern, or not, because that's one of the key things that auditors have to determine. Now, also crucially important to us is the director's declaration. They also will tell us whether the business is solvent, a going concern or not, and other information. And then finally, let me encourage you always to go to what are known as the notes to the financial statements. These are a mandatory part of the financial reporting package, and they help us to put some flesh on the skeleton which is presented in the three basic statements. There's a wealth of information in the notes to the financial statements, and we should always make a habit of reading into that information and looking for more to understand what it is we're actually seeing here. Two important parts of the annual report that give confidence to the users of the information are the Director's Declaration and the Independent Auditor's Report. Both are mandatory requirements for the annual report of a listed company in Australia. Both make clear statements that the financial statements comply with all mandatory standards and legislation and present a true and fair view of the performance and position of the business. In addition, directors must make a further declaration that the business is solvent at the time of preparation of the statements. Now I want you to focus on the notes to the statements. So far we've introduced you to the income statement, the balance sheet and the statement of cash flows, but we haven't specifically drawn your attention to the notes. Now the notes are always there. Note 1 will always be a very detailed statement of the most important accounting policies of the organisation. This is not a two-liner. This can run to many pages, 3, 4, 5, 8 pages is not unusual, actually detailing what are the main accounting approaches that this organisation has adopted. You need to know that because that will tell you what the information is in the financial statements and how you can interpret it. There's much more detail here than you would see in the actual 3 pages of the 3 statements. And we couldn't put that detail in the statements. So the statements are the end line summary. The notes put some flesh on what's in the 3 financial statements. Now, I've said before and I'll say again, the figures and the calculations that you derive from analysis on their own have no life. It's up to you and to me to put them into context and to understand the business and what it means when we see certain figures. The figures only take on life and meaning when we understand what is the nature of the business, what are the constraints within which it operates, what's industry best practice, what are the competitors doing. So we need to have a context within which we interpret everything that we see.